हेलो एवरीवन, वेलकम टू तथागत। आज हम जानेंगे मनी का कॉन्सेप्ट। मनी विच इज वन ऑफ द फंडामेंटल रीजंस फॉर द एग्जिस्टेंस ऑफ मॉडर्न सोसाइटी। मॉडर्न सोसाइटी के क्रिएट होने में ये मनी का जो कॉन्सेप्ट है, इट इज सेंट्रल एंड इट इज वेरी इंपॉर्टेंट दैट एनीवन, whether preparing for exam or not, understands this concept. So let us begin. The first analogy, जो पहली तुलना है जो मनी को समझने के लिए हमें जाननी चाहिए, वो है व्हील की। व्हील, तो व्हील के आने से ह्यूमन सोसाइटी, ह्यूमन लाइफ वाज रेवोल्यूशनाइज्ड। ट्रांसपोर्ट हो या फिर इलेक्ट्रिसिटी जनरेशन हो, हर जगह दिस व्हील इज अ यूबिक्विटस फिनोमिना इन द फॉर्म ऑफ ट्रांसपोर्ट में तो बहुत ही ऑब्वियस है कि व्हील का इस्तेमाल होता है, लेकिन बाकी जगहों पे अब इलेक्ट्रिसिटी जनरेशन में आप देखिए, फैन भी व्हील का कॉन्सेप्ट यूज करता है। जनरेटर्स कुड नॉट बी कंसेप्चुअलाइज्ड विदाउट द व्हील। टर्बाइन which is used to generate electricity, that also requires a wheel. उसके अलावा जो एनालॉग कंप्यूटर्स थे, एनालॉग कंप्यूटर्स, द प्रिकर्सर टू digital computers, even they used rotating drums, and these are just few of the examples where wheel shows its primacy, its importance. तो मनी को समझने के लिए भी हम इस व्हील मॉडल, इस व्हील कॉन्सेप्ट को यूज कर सकते हैं। अब ये मनी क्या है? जब मनी की बात होती है तो जनरली लोग कहते हैं कि इट इज अ मीडियम ऑफ एक्सचेंज, बट दिस मीडियम ऑफ एक्सचेंज इज सिंपली वन ऑफ इट्स फंक्शंस। एक फंक्शन है जिसको मनी सर्व कर रहा है एज एन इंटरमीडियरी, एज एन इंटरमीडिएट गुड। लेकिन ये मनी का सोर्स, मनी का ओरिजिन क्या है, अगर हम इसकी बात करें तो वी कुड से दैट मनी is a system of universal trust. Trust, bharosa. It is trust out of which all sorts of money, all sorts of currencies are minted. क्या है ये trust? This trust is basically trust between people. So money, you cannot eat it, you cannot use it other than anything but only for exchange. मनी का एक्सचेंज के अलावा और कोई यूज नहीं है जैसा कि वो आज एग्जिस्ट करता है। So this trust basically means that we agree, all of us as society, we agree that we accept this medium as a medium of exchange. Let us say one person produces shoes and the other person is producing fruits. तो अब कितने शूज दे करके कितने फ्रूट्स, एक डजन, दो डजन, क्या क्वालिटी है उन फ्रूट्स की, इन सब को कॉम्प्लिकेटेड से सिंपल लेवल पे लाने के लिए वी यूज मनी एज अ गो बिटवीन, एज अ इंटरमीडियरी गुड। तो मनी की जो शुरुआत होती है, अब इस मनी का ओरिजिन सबसे पहले कमोडिटी मनी पे आता है। कमोडिटी मनी, दैट मीन्स एनी मटीरियल, एनी गुड which functions as money. The moment anything starts being used as money, we must remember that it is not being used for its intrinsic properties. It is being used to represent value. कैसे? तो जो सबसे पुरानी फॉर्म ऑफ मनी होती थी वो या तो ग्रेन्स होते थे, एनी काइंड ऑफ एडिबल ग्रेन, बीट बार्ली, बीट राइस, बीट व्हीट, इनमें से कोई भी मनी की तरह यूज होता था। फिर गोल्ड भी यूज होता था, और कई सोसाइटीज में कॉडी शेल्स को भी मनी के फॉर्म में यूज किया जा सकता था। अब समझने की बात इसमें यह है कि गोल्ड आप यूज कर रहे हैं ऑर्नामेंट के लिए, आप यूज कर रहे हैं उसको टूथ फिलर के रूप में, लेकिन जब बात आती है उसको मनी के फॉर्म में यूज करने के लिए, देन वी ऑलवेज से दैट दिस इज वर्थ सो एंड सो मेनी रुपीज, दिस गोल्ड इज वर्थ सो एंड सो मेनी डॉलर्स, बट वी नेवर से a certain amount of good is worth so and so much of gold. So this tells us that the commodity is not being used for its own qualities, for its own usage value, rather it is being used to represent value. अब उसके बाद आता है कॉन्ट्रैक्ट मनी। कॉन्ट्रैक्ट मनी मीन्स व्हेन एनी काइंड ऑफ कॉन्ट्रैक्ट इटसेल्फ इज एज गुड एज गोल्ड, व्हेन इट इज यूज्ड एज मनी, तो उसको हम कहेंगे कॉन्ट्रैक्ट मनी। अब कॉन्ट्रैक्ट मनी की शुरुआत होती है मीडिएवल टाइम्स में, जब आप या मर्चेंट्स एक सर्टेन अमाउंट ऑफ गोल्ड किसी बिग लैंडलॉर्ड या ऐसे हाउस में डिपॉजिट कराते थे जिसकी क्रेडिबिलिटी काफी हाई हुआ करती थी, एंड पीपल वर श्योर दैट एनीवन इज नॉट गोइंग टू रन अवे विद देयर गोल्ड। लेट्स से person X is a big landlord and has enough resources, enough capital, enough name, and enough credibility that you can trust that person enough. So you deposit your gold, and in return for that gold, आपको एक सर्टिफिकेट इशू किया जाता है जिसपे साइन किया होता है, एक सील लगा होता है, एंड इट सर्टिफाइज दैट यू आर गेटिंग दिस सर्टिफिकेट इन एक्सचेंज फॉर दैट गोल्ड। अब जब लोग ट्रेड में इन्वॉल्व होना शुरू हुए, जब लोगों को ट्रेडिंग के लिए डिस्टेंट लैंड्स में जाना पड़ा, दिस आई एम रेफरिंग टू द टाइम्स ऑफ क्रिस्टोफर कोलंबस और वास्को ड गामा, तो जब ये लोग ट्रेड करना, इन लोगों ने ग्लोबली कनेक्शन होना शुरू हुआ, ट्रेड करना शुरू किया, तो गोल्ड को कैरी करना बहुत ही रिस्की था। इट हैड द रिस्क ऑफ लॉस, थेफ्ट और एन नंबर ऑफ अदर प्रॉब्लम्स। लेकिन इसका सॉल्यूशन था कॉन्ट्रैक्ट मनी, और लोगों ने आपस में जब रिकॉग्नाइज किया कि इट वाज हाईली क्रेडिबल, दी सर्टिफिकेट्स ऑफ डिपॉजिट वर हाईली क्रेडिबल, तो उन्होंने गोल्ड की जगह इन सर्टिफिकेट्स को ही एक्सेप्ट करना शुरू कर दिया, और यहीं से शुरुआत होती है कॉन्ट्रैक्ट मनी की। बट क्या हमारे करेंसी नोट्स जिन्हें हम यूज करते हैं, क्या कह सकते हैं कि वो भी कॉन्ट्रैक्ट मनी है? क्योंकि उनपे भी एक स्टेटमेंट होता है कि आई प्रॉमिस टू पे द बेरर अ सम ऑफ 100 रुपीज, या फिर मैं धारक को 100 रुपए अदा करने का वचन देता हूं। अगर अब आप ध्यान से सोचें, तो आपको इन 100 रुपए या 500 रुपए जो भी नोट आप प्रेजेंट करते हैं बैंक में, आपको उसके रिटर्न में और कुछ नहीं मिलेगा। अगर वो नोट पुरानी हो चुकी है तो उसके बदले आपको एक नया नोट दे दिया जाएगा, बट यू आर नॉट गोइंग टू गेट एनीथिंग इन रिटर्न। सो कुड वी से दैट इट इज कमोडिटी मनी, contract money? No, we cannot say it is contract money because it is not backed by something for which the contract was given. तो फिर ये मनी है क्या? इसी के लिए वी यूज दिस टर्म फिएट मनी। अब अगर फिएट वर्ड का मतलब जाने, तो इसका मतलब होता है ऑर्डर और diktat. So the money that we accept today, that we use today, is issued based on government orders, and that is why you hear the term legal tender. That means in order to defray any of the costs, you have to accept this currency. Let's say person A took a loan from person B, and now person A says that I do not want this money in the form of currency notes, rather आप मुझे कुछ amount of gold दे दो, कुछ amount of grain दे दो, but I refuse to accept these paper notes. So then it becomes a legal offense, it becomes a crime. यानी कि not following, not accepting this money for defraying any of your loans becomes a crime. That's why it is called a legal tender. So now that we have covered this evolution of money from commodity money to contract money and further to fiat money, the fundamental thing we can say about money is that it is an intersubjective reality. subjective. That means it originates in people's mind. Trust, you cannot see it, it is not a tangible commodity, you cannot touch it, but उसको हम सिर्फ महसूस कर सकते हैं. We can put our trust, we can put our faith in some sort of object, like we trust our governments to take care of so many problems and so many situations. उसी प्रकार से ये मनी भी एक तरह का ट्रस्ट है. इट डज नॉट हैव एनी मटीरियल बेसिस, रादर इट हैज अ बेसिस इन ह्यूमन माइंड. दैट इज वाई वी कैन कॉल इट एन इंटर सब्जेक्टिव रियलिटी. कई बार हमने सुना होगा कि पैसे को एक इल्यूजन बोला जाता है, या फिर बहुत लोग पैसे को हाथ का मैल बुलाते हैं. इसका ओनली रीजन ये है कि इट इज नॉट बेस्ड इन एनी काइंड ऑफ material reality, rather it is a creation of people's mind. And how it works by changing the basis of exchange from objective to subjective. That means अभी रिसेंटली हम सारे लोगों ने बिटकॉइन के बारे में सुना, क्रिप्टो करेंसीज के बारे में सुना. तो क्रिप्टो करेंसीज आज के डेट में वॉलेटाइल हैं, इसीलिए उनका यूज नहीं हो रहा, बिकॉज दे कैन नॉट बी यूज टू रिप्रेजेंट वैल्यू एक्यूरेटली. टुडे द वैल्यू ऑफ क्रिप्टो करेंसी माइट बी एक्स अमाउंट एंड टुमारो इट विल बी वेरी डिफरेंट वाई अमाउंट. तो इसीलिए वैल्यू रिप्रेजेंट करना मुश्किल है. बट इफ सोसाइटी एज अ होल बिगिंस टू ट्रस्ट क्रिप्टो करेंसीज, then that will become currency. And this word currency is a very good clue into what money is. If you see currency, the meaning of this word is जो भी चीज प्रचलन में है, जो भी चीज चालू है. तो मनी का ओरिजिन आप इमेजिन कर सकते हैं. जब भी मनी की शुरुआत हुई होगी तो ग्रेन या गोल्ड क्यों मनी के फॉर्म में यूज किया गया? बिकॉज पीपल वर ऑलरेडी यूजिंग दोज थिंग्स इन देयर डेली लाइव्स, एंड दैट इज व्हाई इट कुड बिकम अ कॉमन फिनोमेना अक्रॉस सोसाइटी. अगर ऐसा नहीं होता, अगर एक कोई स्पेशल कमोडिटी या फिर कोई स्पेशल गुड को इंट्रोड्यूस करना पड़ता इन ऑर्डर टू कैरी आउट एक्सचेंज, then it would not have been adopted by everyone. But today everyone uses mobile, everyone uses computing technologies inherently, या वो मोबाइल फोन के फॉर्म में हो या फिर आउटराइट कंप्यूटर्स हो. बट अक्रॉस द बोर्ड सोसाइटी में हर कोई मोबाइल फोन्स यूज कर रहा है, एंड दैट इज व्हाई इट इज पॉसिबल दैट क्रिप्टो करेंसीज कुड बिकम करेंसी, क्रिप्टो करेंसी कुड बिकम मनी. And how does money work? So you must pay attention to this line. It works by converting matter to mind. Now imagine a situation जहां पे कोई एक ऐसी चीज है जिसको एक इंसान तो वैल्यू करता है, कोई दूसरा उसको वैल्यू नहीं करता है. Very often we see that in auctions people buy things belonging to their favorite person, जैसे कि आइंस्टाइन हो या कोई एक्टर हो. तो उनकी यूज की हुई चीजों को लोग ऑक्शन में खरीदते या बेचते हैं. क्यों खरीदते हैं? क्योंकि दे वैल्यू दैट थिंग, दे हैव सम सॉर्ट ऑफ इमोशनल और इंटेलेक्चुअल वैल्यू फॉर दैट थिंग. अब उस इंटेलेक्चुअल वैल्यू को रिप्रेजेंट करने के लिए ये मनी इज अ प्रॉक्सी, मनी इज अ वे टू शो हाउ मच यू वैल्यू अ सर्टेन काइंड ऑफ थिंग. Let's take the example of iPhones. For somebody it might be a luxury, or for somebody it might be an impossibility to purchase. So people are valuing this thing differently. Somebody might choose to buy it, somebody might not choose to buy it. It is only a reflection of values, and this is what money is. To use a proper term for it, we can say that it's ontologically subjective phenomena. Ontology यानी कि द बेसिस ऑफ बीइंग, या फिर हिंदी में इसे तत्व मीमांसा भी कहते हैं. तत्व मीमांसा यानी कि व्हाट इज द मटीरियल बेसिस ऑफ मनी. इट इज नॉट एनी सॉर्ट ऑफ मटीरियल बट रादर माइंड. इसको समझने का दूसरा तरीका हम ये कह सकते हैं कि मनी इज एन ऑब्जर्वर relative phenomena. Observer related phenomena. As a thought experiment, imagine that you pick out somebody from 5000 years ago and you bring them to the current times. अब आपने उनके हाथ में एक नोट हैंड ओवर किया, क्या करेंगे वो इस केस में? लेट्स से दे आर हंग्री, दे आर लुकिंग फॉर फूड और एनी सच काइंड ऑफ थिंग. तो अब वो पहले इस नोट को खाने की कोशिश करेंगे. हो सकता है वो इसको फाड़ के देखें, हो सकता है वो इमेजिन करें कि इसमें से कुछ ऑटोमेटिकली ये जनरेट हो जाए. जस्ट लाइक इफ यू गिव अ मोबाइल फोन टू somebody from long time ago, from ancient times, then they might think that it is some kind of sorcery, some kind of magic. उसी तरह ये money is an observer relative phenomena. यानी कि अगर आप रास्ते में जा रहे हैं अपनी गाड़ी ड्राइव करते हुए और आप एक पत्थर से टकराते हैं, तो इट इज वेरी मच अंडरस्टैंडेबल टू एनी काइंड ऑफ ऑब्जर्वर दैट व्हाई योर कार स्टॉप्ड, व्हाई योर कार कोलाइडेड, हाउ डिड इट चेंज इट्स स्टेट ऑफ मोशन. लेकिन अब इमेजिन कीजिए कि आप एक किसी लग्जरी ब्रांड के सामने खड़े हैं, उसकी शोरूम के सामने खड़े हैं, एंड नीदर इज एनीवन पॉइंटिंग अ गन एट यू, नॉर इज एनीबडी स्टॉपिंग यू फ्रॉम गोइंग इन, but what is preventing you from not entering? It is this phenomena of money, because you understand that you will have to pay something in order to get that thing. A little child might pick up anything from a showroom and try to run out, but in that case he or she will face the consequences. तो इसी चीज को हम कहते हैं ऑब्जर्वर रिलेटिव फिनोमिना. आई होप this point is clear to everyone that money has modern form of money. When we talk of commodity money, definitely it is some sort of commodity, but this fiat money is not based on any form of material. It is rather a creation of human mind. अब जब लोगों ने ये कॉन्ट्रैक्ट मनी इशू करना शुरू किया, then they realized that people were depositing money but not withdrawing it for a very long time, or even if some people were withdrawing money, not everybody came together at once, and so there was a large reserve already kept with them. So this led to the invention of what we today know as fractional reserve banking, which means you have to keep a small fraction of all the money that has been deposited in the bank or with the bank, and you can lend out the rest in order to create credit. So यहीं से शुरुआत होती है मॉडर्न बैंकिंग फिनोमिना की. Now, a very important thing to know is that this modern money could only be possible, modern money, banking, and the credit system could only be possible because of capitalism. And one very basic assumption of capitalism, which we should call perpetual growth. Capitalism assumes, and also through its maxim and its commandments, it tells us that profit generated from the activity of production must be reinvested to increase production. Therefore, the economy is a growing pie. Every year it is supposed to grow. And that is why the most important thing countries, nations, they are concerned about is GDP growth. This is what nations are mostly concerned about. Now, why are they concerned about growth? That is inherently related to the phenomena of money and credit system. So you see, अगर GDP growth की rate भी slow हो जाती है, then it is already a panic situation. And if the GDP shrinks, if there is a, so first there is a slowdown. then recession, and then an economic depression. You must have heard of the Great Depression that started in 1929 in America and impacted the American economy for over 10 years. Now, why is the lack of growth of an economy a very supreme concern, a very big problem? That is because of the phenomena of modern money, banking, and credit. Let us see how. So, in fractional reserve banking, what banks are actually doing, banks का जो काम है वो है credit creation. Credit. If you pay attention to the word credit, credit का मतलब होता है trust or belief, and it is this belief in the growing rate of economy which causes banks to create credit. That means, let's say a bank has certain amount of deposits with it. So the only restriction on it are the regulatory requirements like cash reserve ratio, SLR, and these are the terms we'll look at in detail. But the thing to understand is that banks create credit out of thin air. That means the bank opens an account in your name and issues a certain amount of money to you, which currently does not exist. It is credit. It is being given to you in lieu of something you have mortgaged that could be monetized in theory, and it is giving you the money in order to create something that still does not exist. You took a loan to start a business whose plan only exists in your mind and not in reality, not on earth as of yet. तो इसीलिए ये जो मनी है, it is called credit. Or we could say that this credit, because it can be used as money, that is why the entire gamut of regulations are applied to it. Credit, this trust in future, is inherently related to the phenomena of capitalism and GDP growth. I hope you are able to appreciate the fact that only as much currency should be ideally issued, whatever is the rate of growth of that economy. That means exchange medium, the medium of exchange should only be present in that quantity, in that amount in which goods and services are available. If this does not happen, then we are going to face the phenomena of inflation. And you know how corrosive inflation is. इन्फ्लेशन के बारे में हमने लास्ट क्लास में भी देखा था और फिर से मैं आपको रिपीट करना चाहूंगा. Inflation. Inflation means that the current value, the current amount of goods that your money can purchase is not being adequately reflected in the numerical value of that money. Let's say that in the year 2023, for rupees 100, you could buy one dosa. And in 2024, you need to spend 120 rupees to buy one dosa. So here, this rupees 100, or you could say by unitary method, that this 1 rupee represents 1 by 100th of a dosa, whereas here 1 rupee represents 1 by 120th part of that dosa. So you can easily make out that this is the lower value. That means now your every rupee counts for less than it did count before. And why would this happen? This would happen when there would be a lot of money, or money more than the amount of goods and services present in the economy. Then its value will reduce, because now everybody has that money and everybody will want that good. And when everybody wants a certain commodity, you start bidding, and this bidding takes the prices up. Let's say coffee is going for 100 rupees for a whatever unit quantity is being sold in the market. Now, if everybody has those 100 rupees to spare, then naturally the seller is going to sell to the person who is ready to give 110 rupees for the coffee or 120 rupees for that amount of coffee. And this is what the phenomena of inflation is. So once again, let us see what this money is. Money, what it is, not what its functions are. It functions as a medium of exchange, and because of this function of it being a medium of exchange, its other functions like store of value or or medium of valuation itself. Medium of valuation itself. You represent all kinds of value in terms of money. A bottle of water for 20 rupees or a t-shirt for 500 rupees. So any kind of value is being represented in terms of money. All of these are because of the primary use as medium of exchange. But what we must remember without fail is that money is a system of trust, and it works because of universal convertibility. Now, by this convertibility, I do not mean that US dollars could be exchanged into rupees or rupees could be exchanged into pounds. No. This convertibility means any sort of function, any sort of service could be converted into a different kind of service or good. Let us say that health could be converted into education. A doctor or a medicine person providing some kind of medical or health services could easily use the money gained from providing those services into education. Or that is why crime could also be converted into education. When you carry out a crime, let's say dacoity or any such kind of thing, then you do not take any kind of material, you rather take money, and this money can easily be used to buy anything else. So that is what is meant by universal convertibility. Money could be used to buy anything and almost everything. So that is what money is. System of trust. Now, trust exists as a creation of human mind, and that is why money is a system of trust. I will emphasize this again and again. Money is not based out of any material. It is not based on any material. Money is based on a system of trust. It is an observer relative phenomena. That means we need to understand this system of money. Only then we could start. Or even if we don't understand this money, it has its conceptualization based on human trust. We certainly don't need to understand in order to use anything. Let's say computers or mobile. We do not know how it functions, but still we could use it. Now, coming to fractional reserve banking, you already know that fractional reserve banking means you have to keep a certain fraction of the deposits as reserves, and that is how banking is carried out. Now, before we move on, let's get to know this term fiduciary money. Now, whenever let's say someone having an account at any kind of Indian bank or any other bank, let's say State Bank of India, and that person, that account holder, issues a check to somebody having an account in Punjab National Bank. Now, who will verify that the issuer has that particular sum in their account. So it is SBI who has to verify that the check issued for 1,000 rupees is actually backed by those 1,000 rupees. So this, and also understand that the check, let's say it's a check issued by SBI. So now you can say that this check itself functions as a kind of currency. You simply present this check and you get whatever commodity you want for places which accept checks. So now this duty of making sure that the issuer of the check has that amount is a fiduciary duty. It is a duty of, again, trust, and that is what fiduciary money means. The money which is being used, which is issued by the bank, that is fiduciary money. When you use your Paytm or Google Pay or any Bheem app, any kind of service, then that service provider primarily has to make sure that you do possess the amount of money you're spending. The transactions are settled at the end of the day. They are not settled immediately, but immediately what needs to be done is to make sure that the account possesses or holds the amount of money it is spending. And now, if you have understood what fiat money, what fiduciary money is, you will be very easily able to understand the concept of monetary aggregates. You would have seen this term M0, M1, M2, and M3. Many a times the nomenclature is changed and people use M1, M2, M3, and M4. Not people, institutions. So these M0 represents currency and coins. But what else is being used as money? It was that credit that was being created by banks. As I said, banks are an institution of credit creation, credit or trust in the future. How credible is a person taking that loan? So credit, there was the money that did not exist before. The banks have injected it into any person's account, and now this credit itself can be used as money. Because it can be used as money, therefore we need to know what is the extent of such credit creation, and that is why we have monetary aggregates: net demand and time liabilities. Net demand and time liability. Net demand and time liability. This deposit or loan that anyone has received, it is equivalent to what somebody has attained. It is equivalent to another person's deposit which that person has attained by depositing a sum of money. एक इंसान ने पैसे जमा करके अकाउंट में इतने पैसे रिफ्लेक्ट कर रहे हैं उसके, और दूसरे पर्सन ने कोई पैसे जमा नहीं किए, उसको लोन मिला हुआ है, फिर वो भी उस पैसे को इक्विवेलेंटली, उस लोन को इक्विवेलेंटली यूज कर सकता है. इसीलिए हमें जरूरत पड़ती है इन मॉनेटरी एग्रीगेट्स की टू अंडरस्टैंड द एक्सपेंस ऑफ क्रेडिट present in the economy. And now let us move on to the Reserve Bank of India. So as you can see this term, reserve, this reserve signifies the reserve currency it keeps. All the aggregates that we have heard, like CRR, which stands for cash reserve ratio. Cash reserve ratio, that means the amount stipulated by the RBI needs to be parked. A certain fraction of all the deposits a bank has received needs to be parked at the RBI in order for it to carry out its banking functions as a security, so that there is not a bank run on the bank. Bank run means the phenomena when everybody is going to bank in order to withdraw the money. And as we saw, banking is possible, fractional reserve banking is possible because you only keep a certain fraction of the deposits based on the fact that not everyone is going to come and withdraw the money at the same time in full. That means you withdraw money but only partly, and not everybody does so at the same time. If such a situation would occur, if such a phenomena would occur, then we would face bank run. And that is why these prudential norms of CRR or SLR, SLR stands for statutory liquid ratio. Statutory, that means by law. Liquidity means commodities that are easily able to be converted into money, which is gold and government bonds. Why government bonds? Because the government has zero chances of defaulting, because it can always print the money and make it available to you. It is also known as gilt-edged bonds. That means gold-edged bonds, because this government bond is as good as gold. And that is why banks have to keep a certain amount as SLR. So these are the tools to control monetary policy. And now let us come to this liquidity adjustment facility or LAF corridor. Corridor means a certain bandwidth in which all the rates are being set, between which all the rates are set. Liquidity adjustment. A bank might fall short on money and it needs to make further loans. If it wants to make further loans, then it must have certain deposits in order to issue further loans. So what is the bank going to do? The bank will borrow from RBI. The bank is going to borrow from RBI, and it will, so earlier as in before 2018, the ceiling or the floor, that means the floor means the lowest rate at which money was being issued was the not being issued. I'm sorry, it was not being issued, but the lowest rate at which the exchange of money between the bank and the Reserve Bank was happening was this reverse repo rate. In a minute, we'll come to this repo and reverse repo. Or first, let me tell you about the instrument of repo and reverse repo. Then we'll be able to better appreciate this concept of liquidity adjustment facility. This term repo stands for repurchase obligation. Now we just saw that the edifice of banking is based on two monetary tools, that is cash reserve ratio and statutory liquidity ratio. This statutory liquidity ratio comprises government bonds and gold. So these banks actually are captive markets for the government to issue bonds, in return for which it gets money. And this repurchase obligation is based on these bonds. That means when any bank wants some money from RBI, it needs to pledge its bonds and promise that I'm going to repurchase these bonds and pay you back the money on a certain interest rate. That is what is known as repo. And now it will be very easy to comprehend reverse repo. reverse repo. Reverse repo means when a bank has, not the RBI, but commercial banks, when they have excess of cash which they are not even about to loan out, because the country might be, the nation might be going through a certain economic cycle in which people are not taking risks, people are not borrowing, not getting into production, and that is why banks might have extra cash. So they park this cash, extra cash. One certain bank might park the cash and other bank might want to borrow. So when they park this cash, the RBI provides them with some bonds, and they promise that they are going to repurchase these bonds at the end of a certain period at a certain interest rate. So that is the repo and reverse repo operation. So rather than making loans, the bank earns some interest on the money they have parked at RBI. So now it is very easy to understand this liquidity corridor or liquidity adjustment facility corridor, which is something like this. The lowest is called the standing deposit facility. Standing deposit facility. That means there will be no exchange of any kind of bonds in order to deposit that sum. So that is the meaning of standing deposit facility. No bonds will be involved. It will simply be parked at RBI, on which the bank will be making a certain amount of interest rather than letting the money be idle. Above it is the reverse repo rate, which might be 3.75%. That means now you are giving bonds, you are getting bonds from RBI, not giving it, getting the bonds from RBI. And what will a bank do with these bonds? So there is an interbank exchange rate like LIBOR, London interbank offer rate, and MIBOR, Mumbai interbank offer rate. That means before going to the RBI, the banks might want to settle such kind of transactions amongst themselves. So the extra bonds it has, the bank can use to lend it to some other bank, some other commercial bank. And then comes the repo rate, the rate at which a bank borrows. This might be 4%. And finally, we have the marginal standing facility. Again, we see this word standing. That means if the bank faces a cash crunch and it wants cash for a very short period of time, then this is the penal rate. That means there is a penalty which the bank is charging as interest rate, which the bank has to pay in order to get extra cash. Let's say there is a crunch, there are more number of borrowers on a certain day and they end up borrowing that amount of cash. So now the bank requires certain amount of money from the RBI for a very short period of time, and then its rate is going to be still higher. So this 0.5% that you see, this is the penal rate, this is the penalization, this is the extra cost that the bank has to bear in order to make up for its cash shortage. Cash reserve ratio, it might be stipulated and they might lack that amount of cash. So in order to get it, they have to borrow at this penal rate because they have already exceeded the limit that they could under this repo rate. So this is what is known as the liquidity adjustment corridor or liquidity adjustment facility. We begin with standing deposit facility. Standing means no exchange of bonds will happen. Reverse repo, repurchase obligation of what? Of bonds. You have to repurchase these bonds. Then repo rate. In case of reverse repo rate, the RBI will be providing bonds to banks and banks will be parking their money. In case of repo rate, the banks will be borrowing money and giving bonds to RBI. And finally, in the marginal standing facility, when the banks have exceeded the amount they could borrow, then they have to pay an extra penalty rate at which they will receive funds, extra funds. So now, origins of RBI. It is based on the recommendations of the Hilton Young Committee, set up in British India in order to control the banking and finance in India. And it was established in 1935 based on the RBI Act 1934. Other facts that you must know is that till the year 1948, RBI served as the central bank of Pakistan as well. Till the year 1947, RBI also served as the central bank of Myanmar. Till 1948, it served as the central bank of Pakistan and Bangladesh as well. And the year 1949 is also important because RBI was completely owned by the government. Completely government owned. Before that, RBI started as a shareholders bank. As a shareholders bank. But it was only in the year 1949 that RBI was nationalized. Before RBI, which bank was carrying out the functions, the sovereign functions that a reserve bank carries out? So it was being carried out by Imperial Bank of India, which we today know as State Bank of India. So the Bank of India remains same. Imperial becomes state. And that is a short history of the RBI. I hope okay. So see, I will repeat it. Somebody has said in the comments, what is a more easy way to understand these SDF, CRR, SLR, these things? So maybe it was a little unclear. I'll go through it again and try to explain. This money itself is a creation of trust. How can we understand this? What is another way to understand that it is based on trust? It is the fact that when a country, when a nation faces political turmoil, then its currency value also goes down. Why it goes down is because people lose faith in that system. Its credit rating becomes weak. And credit means what? Credit means a trust in the future. Cred, the root of this word cred itself means trust. So credit means trustworthiness, or you might have seen your own CIBIL scores, credit scores. So this credit scores is about the credit worthiness, how much you or any system can be trusted. Based on that is this system of money. Anything could be used as money. To tell you an interesting story, in the German prisoner of war camp, prisoners of war at the end of World War II, what strange phenomena was observed, that cigarettes were being used as a medium of exchange. 400 cigarettes for a bottle of wine, 20 cigarettes for a packet of bread, 40 cigarettes for extra butter, jam, whatever you wanted. So this cigarette itself is, you cannot use, you cannot consume it, you cannot eat it, but it becomes a medium of exchange. That means whatever people are ready to trust in, whatever thing, whatever commodity, whatever figment of their imagination, it would be better to use this term, figment of people's imagination. The important thing to note is that this imagination is not an individual imagination, it is a collective imagination. Collective imagination. Like religion is often called opium of the masses. That means it is a collective delusion. When you start believing that certain phenomena is going to happen along with a lot of other people, then it is a collective imagination. And that is why I use the term intersubjective reality. Intersubjective, not intrasubjective. There is a difference between intra and inter. Inter means amongst. Inter house competitions, inter school competitions, that means many schools are participating. Intra school competition means the competition will occur in that school, within the boundary of that school, within the members of that school. Though only those who are part of that school will be taking part in a competition. But inter school competition means all the schools involved will be participating. So intersubjective reality, that means all the subjects means people are not objects, people are subjects. There is subjectivity. So, and money is an intersubjective reality, a reality in which everyone chooses to believe it. That is what money is. I hope this German prisoner of war camp example clarifies it. And so now, because this fiat money, this rupee that we see, because it is issued by the RBI. RBI is issuing it, but you cannot open an account at RBI. You have to open an account at any of the commercial or scheduled banks. So the fact remains that this money is created by the RBI. The only backing is the backing of force, the backing of law. If you refuse to use this money, then first of all, you cannot pay tax. Why this money comes into circulation as issued by the government is because you have to pay taxes in terms of that money. You cannot go to the Central Board of Direct or Indirect Taxes and say that, I'm willing to give the amount of tax in terms of gold or in terms of grain, or I would like to deposit the shoes that I have made or the books that I have published. You cannot pay your tax because ultimately money cannot be consumed itself. Money will be used to purchase something. That is the only function of money. Purchase, or let's say extortion, tax, extortion or other such kind of bribery, theft, they are also carried out in terms of money. But because this money can be used ultimately to purchase something in order to exchange, that is why. So because this money is being created by the RBI, so there are certain prudential norms. This fractional reserve banking, if you understand this fractional reserve banking, then it is very easy to understand SDF or MSF or repo and reverse repo rate. What is this fractional reserve banking? This fractional reserve banking means, because we understand that not all the depositors are going to withdraw their money all at once and in full. अगर आपने 1,000 रुपए या 10,000 रुपए जमा करा है, तो आप उसको एक दिन में ही नहीं निकाल लेंगे. हो सकता है आप उसको 4, 5, 6, 8, 10 महीने में निकालें. तो क्योंकि आप पूरा पैसा एक बार में नहीं निकाल रहे, और जितने लोगों का अकाउंट है बैंक में वो सारे के सारे एक बार में नहीं निकाल रहे, इसीलिए बैंक्स व्हाट दे डू इज दैट दे कीप अ सर्टेन फ्रैक्शन ऑफ ऑल द डिपॉजिट्स एंड लेंड आउट द rest of the money. Now, in order that there is no collapse, in order that there is not a bank run, in order that people do not panic, what happens? There are certain prudential norms like cash reserve ratio, based on the calculation, based on observing how many people are withdrawing money in a particular day, that is extrapolated, and CRR is decided, then SLR is decided. Statutory liquidity ratio, that means you need to keep certain amount, not just as cash, but as gold, but as bonds. So this gold can easily be converted. Let's say there is a collapse of the economy in which the rupee value goes down drastically. So in that case, the gold could be used to purchase different commodities like oil, for example. And now, as far as your policy rates, we call it policy rates because it concerns the policy of, it concerns monetary policy. Monetary policy. Look, another very fundamental thing that you should understand about this phenomena called credit is that, let's say I am a manufacturer, I manufacture something and I give it to you, but you say that I'll give you the money, मैं आपको पैसे तब दूंगा, ये जो भी चीज आपने मुझे दी है उसके बदले में, जब मेरा सारा सामान सेल हो जाता है. तो आपने मुझे एक सर्टिफिकेट इशू कर दिया कि 1 लाख रुपए मुझे आपको देने हैं एट द एंड ऑफ द पीरियड व्हेन ऑल द सेल अकर्स, जब सारा सेल हो जाता है. But I need the cash immediately. I want it immediately. Maybe I want to make further investments or for whatever n number of use that can be. So I go to a certain person. I say that so and so person is a trustworthy person. वो पैसे दे देगा उसका सेल होने के बाद, यहाँ पे उसकी दुकान है. But मुझे पैसे immediately चाहिए. अब मुझे immediately चाहिए तो आप लाख रुपए की जगह मुझे 90,000 दे दो, बाकी 10,000 आपके हो जाएंगे at the completion of that period. Similarly, credit that is issued by a bank, so it is the discounted value of the future sum that you are going to pay. If you receive 10,000, at the end of a year you might have to pay 15,000 in return. So this 15,000 rupees is given to you in a discounted form. You are given 10,000 rupees and keeping factors like inflation and the growth of the economy, you are having to pay 15,000 rupees in return for 10,000 rupees. You are getting the 10,000 rupees today, and after the end of the loan period, you ought to pay a little bit more. And this credit means, itself means trust in the future. It is only trust based on which you are being issued any kind of money. What are these? So now that you know that the money is being issued by the RBI, in order to prevent any kind of crisis, the RBI sets certain norms. These are the tools by the help of which RBI will control the supply of money in the economy. The lowest, the floor of this policy rate. These are all the policy rates. Policy of what? Policy of issuing money. You want to increase the supply of money in the economy. Let's say it's a productive boom phase. It's the cyclical up, the up cyclical time of the economy, or a boom phase. The economy is booming. There is boom and there is bust. So when the economy is on a high, then the government might want to issue more money, or as counter-cyclical policy, government might want the banks to lend a little less. So standing deposit facility means, see, pay attention to each and every term and you will be easily able to understand. Standing means without providing anything in exchange, in return. खड़े खड़े आपको मिल गई वो चीज, स्टैंडिंग. डिपॉजिट, अब डिपॉजिट कौन करेगा आरबीआई में? बैंक्स करेंगे, कमर्शियल बैंक्स करेंगे. आरबीआई डज नॉट डील विथ people on an individual basis. RBI deals with banks. So the banks are going to deposit what? The extra cash that they have. Why would they deposit this extra cash? Because nobody is taking loans, and if nobody is taking loans, then rather than letting the money lie idle, the bank would want to earn a certain percentage, earn a certain interest on its funds. The RBI might decide to give that amount to another bank which requires it, which is still doing business, which is still making loans. Above this, there is the reverse repo rate. Reverse repo means repurchase obligation. So you reverse the phenomena of repurchase obligation. Repurchase obligation is generally, or the repo rate applies to banks, the rate at which banks can borrow in return for a certain sum of interest, a certain amount of interest that they pay. And in order to avail these funds, just like you want any fund, if you want a loan, you might have to give gold as security, you might have to mortgage your house. Similarly, the banks have to mortgage certain amount of securities, government bonds. That is called repo operation, repurchase obligation. The bank is obliged to purchase back the bonds at the end of a certain period. That is repo. Reverse repo means now the banks do not want money. Banks want to give money. And if they are giving money, they'll get bonds in return. That is repurchase. Repo rate. But now let's say the banks have already lended enough and given the norms, banks have to stick by those norms. If you are lending a certain amount of money, you are still creating deposits in people's accounts and you must have a certain fraction of that as reserves, but you do not, you lack it. So if you lack it and you have exceeded the amount which you could borrow under repo rate, then you have to pay a penalty rate, marginal, again स्टैंडिंग फैसिलिटी, मार्जिनल स्टैंडिंग फैसिलिटी, यानी कि आपको बिना कुछ लेन देन किए हुए खड़े खड़े ये लोन मिल जाएगा, but its rate will be higher than repo rate. Let's say repo rate is going at 4%, then this rate might be 4.25 or 4.5% depending on what the policy of RBI is. That is what is known as marginal standing facility, and since it is a graded scale, it is called the liquidity corridor or liquidity adjustment facility. I hope your question is answered. And any tips on effective GK learning? So effective GK learning, in order to learn GK effectively, see, what generally we understand as general knowledge. General knowledge means any person who's graduating out of school must have certain words, certain terms, understanding of certain phenomena, certain systems in their corpus. तो knowledge वाला part हुआ जो concepts हैं, जैसे कि concepts of geography. You understand why there is day and night. Is the earth going around the sun or is the sun going around the earth? There was a lot of confusion before. Copernicus, Galileo, these people finally settled the debate once and for all. Then, like we are studying economics now, so you must know certain concepts. That is knowledge part. And in your exams, you get certain current affairs. So this current affairs, these facts must be, see, one very important thing to understand is that your brain is a very energy intensive mechanism. It is very efficient. It specializes, we could say, in forgetting. Now, if you try to fill the image, if you try to create a big picture with the help of small details, let's say you have to fill in every pixel of a picture and remember which should go where, it is very, very difficult to do. But if you know a big picture, if you understand the concept, then it is very easy to fill in the details because you have the conceptual map of that image. So first know the concepts, whatever underlying concepts are there, and then you can fill in the details. Like repo rate, you will easily know, or you can easily decide given the options, because there will be some sort of gradation in those. You will easily understand which one is the repo rate and which one is the reverse repo rate. So you don't need to memorize many things if you have the concepts. That is one effective way. The other effective way, so the problem that most students face is that they are unable to make sense of what is written in the newspaper. So one simple practice that you can do not go through the whole newspaper, but in the editorial section, just read it, just go through it, just run your eyes through it, and just underline whatever terms you do not understand. Now find out the meaning of those terms. Some sort of hard work you have to do. And after that, after finding out the meaning, reread that thing. Now, in the second time, you will be able to grasp most of the things written in the newspaper. So that is one way to approach. Or the second method, the first method is you first know certain subjects, know certain concepts, geography, economics, or even history for that matter. Why are certain things happening